All right, Jim Blanda, we're rolling in. How are you, my friend?
Good, Matt. How are you doing today?
I'm doing great. I want you to tell me a story. We're going to go in with a story. You have a very interesting story because you've gone from this end of the spectrum of real estate deals to this end of the spectrum of real estate deals. You're not a principal. You're a broker.
Yep.
You're a real estate broker. You're a commercial real estate broker. But you have a niche that I love. You have a niche that I love so much I actually invested in your company.
Yep.
Right. In full disclosure. And before that, you started with the bottom of the totem pole kind of a space.
Dirty, raw real estate.
Dirty and raw. So we're going to go through all of it. I want you to, and through that, you know, what we do here is on Deals Gone Wild is we tell some wild stories, man. And there's some wild, great business stories and human stories out there. You have probably more of those than anybody having started where you started in real estate deals.
Yep.
Always as a broker or an intermediary, right? So
Correct.
Let's start with that. I know you got a story in mind. Jump in.
Yeah, so we'll just jump right into the story here. So I started when I first got into real estate, started with wholesaling real estate. If you're not familiar, it's, getting a property under contract, typically a distressed property. So there's always going to be some nuance to it.
This is the bottom of the totem pole I was referring to.
Yes.
Sorry for wholesalers out there, but it is sort of the bottom of the totem. I don't mean that in a disparaging way. But
You're taking something from the bottom and bringing it up.
Yeah,
and that's what you're doing.
It's where a lot of people start and many graduate. But
Exactly.
you worked for a company. What you
Correct.
were wholesaling on your own. You worked for a company in the wholesaling space that was actually a pretty large company as far as wholesaling companies go. National, many cities. Also, that's a very unusual thing. I mean, usually
Correct.
wholesalers are independent. You really don't need much infrastructure. It's just you find a seller, you find a buyer, you put it together. So it's difficult, unusual to find like these, organizations, really.
Correct.
Right? Yeah. But you found one and you were there.
Yeah, so it was a national company. We were flipping the contracts on the homes, finding distressed owners, selling them to investors to fix and flip them. So to get into a wonky deal story here is I was actually at a networking event. This was in Philadelphia, and met a guy and girl. They were looking to get into their first investment property, buy a home, flip it, sell it out. So, I sat with them, met with them, understood what they were looking for there. We found a good opportunity in South Philadelphia, put it under contract with them. So in wholesaling, it's a very tight timeline. Things move quickly and there's not a due diligence period. You don't get a due diligence period. You don't get time to put money down, have 30, 60
tells
days.
me that's on purpose.
Yeah. You'd want to do your upfront due diligence. This
Right.
couple, obviously, their first investment property, didn't do a lot of that upfront due diligence. Made a quick decision, put in a contract with us and our company. Turns out the deal was financially just didn't make a ton of sense. Rehab budget way higher than we were expecting there. So in wholesaling, you put the money down, you can't get it back. Like it's not a situation where commercial, you get a due diligence period, can pull your money back out. In this situation, put the money down, it's hard day one. So they get like 25 days in, they realize they don't have enough money for the construction budget. So they have to terminate the contract. At the company,
they're trying to flip this thing. They're trying to do work, improve its value, and flip it.
Exactly. They're coming in. They're going to do construction on it and sell it off. Realized construction's way more than they anticipated. They have to back out of the deal. I think it was like $10,000 they put down on the transaction. So us as a company, we put that money out up front. So if they back out and we give them their money back, we lose our 10 grand. So in this situation, what we told them was, hey, you're in a tough spot. You can reallocate your deposit to another deal. We'll try to sell this one and get it all wrapped up in that time frame.
Right.
So we actually allowed them to do that and gave them like 60 days to move the deposit to another transaction. And during this time period, I realized like the guy and girl were there were some issues I was starting to realize between those two. And what I found out was we actually put it under more of a rental property is what they went to go purchase. Less of a rehab budget. We went through that already. Yeah. They didn't want to get into the construction costs and all of that. Turns out that this guy and girl who I thought were husband and wife or boyfriend, girlfriend were boyfriend, girlfriend, but the male was actually married to another woman.
To someone else.
She had no idea that all of this was happening, and they were going through a divorce at the time. So they made this quick decision to try to put some money out and flip a house prior to the divorce settlement. And he's trying to move some money around and make some money with his new girlfriend, whatever that is, prior to the divorce. So I'm starting to realize all of this. So we get them into a rental property, and all of this starts unfolding. So he starts calling me, Jim, my wife found out about this situation. I need the money back. I need to do this. And at this point, they've already backed out of one deal. We allowed them to move some money around. This is now the second opportunity. And he's telling us that, hey, I need the money back. My wife figured all of this out. Unfortunately, we were in a position that we were not able to do that.
Right.
So they actually went forward with the transaction, closed on the house, and I believe I didn't follow up too much after the fact, but I know that they ended up moving in together for a little bit.
Okay.
So what started as an investment property between these ended up to be a whole circle of, wife, girlfriend, then ended up being a home for the boyfriend and girlfriend, not with the wife. They ended up coming in and buying the home to live in for a little bit.
So it's safe to say you started with the unsophisticated real estate buyer and
Absolutely.
unsophisticated real estate seller in transactions. Wholesale deals are, they're full of that, right? That's what you're doing. You're trying to, in any brokerage, you're trying to find buyers and sellers in a match. You move on to more sophisticated buyers and sellers, right? Which you've done a ton of.
Yeah.
I'm sure there's crazier stories than that from your wholesale days, right? I would imagine.
Absolutely. There's some ridiculous
we don't even have
ones
to
for
get
sure.
into all of them. It's crazy, but I'm going to jump around a little bit. Let's talk about the niche you're in right now, which is, we'll call it IOS, Industrial Outdoor Storage, which is a fancy, institutional name for industrial outdoor storage. Boat and RV storage is really how we started calling it. I think it's graduated to iOS.
Correct.
Right?
Correct.
We like to put acronyms to things. Everyone likes to do that. But boat and RV storage is a really I think it's a sexy asset class. I'll tell you why I think it is. You tell me why you think it is, first of all.
To keep it very simple, the biggest thing is it's a fragmented market with rents that are below market. Mm-hmm. So there's a lot of opportunities out there where current operators are running their properties at maybe 70% of where the markets are at, where the market rents are at. And additionally, there are tons of different property owners that own 1 to 2 of these things.
That's the
so my
secret
job
to
as a
any
broker,
business, right?
bring them all together.
Yep. And most industries have been rolled up on because at some point, and now we're going back decades, right? There was the great roll up that started in the 80s, even in the 1990s, in the 2000s, of large institutional money looking for less sophisticated operators, kind of quote unquote mom and pop operators.
Correct.
Whatever business, you can apply that across industry. And so here we are with something that we feel is still now that's the appeal that you have. I'll tell you the appeal that I had, that what's appealing to me about this industry, about the iOS business, RV and boat storage, industrial outdoor. First of all, it's sort of a play on e-commerce. Yeah. Right. And that's not from the demand side. It's still from the supply side. It really is a play on e-commerce.
Absolutely.
Right? You've got, because it's not just boat and RV. When you're talking about the industrial outdoor storage part of things, you're talking about, train and truck storage. And, it's not last mile. It's the last thing before last mile, right?
Exactly.
Reconnection, switching storage facilities. On the demand side of things, what appeals to me is what I've seen in the last, and before you and I even met, what I watched happen in the last, 5+ years is cost of property go up dramatically, right? And people that used to be able to buy a vacation house can't buy a vacation house anymore. Prices have gotten out of reach for a huge segment of the population, but they can still buy an RV, boat maybe 2, fine. I think the RV business has been really taking off. And I think it's very underserved, right? And there's some businesses that serve that business really, really well. I think storage is a big deal. We're sitting right now in Florida. There's homeowners associations cover the vast majority of the, private homes in the state.
Absolutely.
And you can't park your RV on your property. And in some places you just wouldn't want to park your RV on your property. You need storage for it. Proximity is important, but exact location is less important. You can have that slice of land that's next to the expressway or next to the train tracks, and it doesn't really matter. Improvements on the land aren't really that important. It's simple. It's really not that expensive to improve land. Entitlements and zoning is a different story, like anywhere. But
that's the tough part. But that creates the barrier to entry as well. That keeps the your property value high, and all of that is those issues once you get it done.
And the limitations on developing new, right?
Exactly.
Right.
Exactly.
And whatever existing supplies out there. But demand to me, right? Supplies, what got really interesting to you, and maybe that was the focal point. Demand to me is super interesting. I think demand for RV and boat storage specifically, and also the e-commerce play on the industrial outdoor storage is still early. I think there's a lot of demand, way more demand in front of us than there is that we're serving right now.
Absolutely. I mean, so even like the amount of funds and capital that's being allocated to the space. I mean, the RV and boat storage subsector of iOS, like that being its own thing is very interesting because of all the things you hit on there. But additionally, what I've realized between all of the subsectors of iOS, whether it be truck parking, RV and boat storage, the container storage, logistics centers, all of that, is you're really taking. You're not looking for that main type property where you're on the corner of the two main roads, like a CVS, where you're trying to make it look all pretty. It's this stuff that's a little bit off the beaten path, where you're getting large tracts of land. This is what really also attracted me to it, is you're getting large tracts of land that are going to cash flow. And who knows where that goes over the next 10, 15 years. So you have these big groups buying up these large tracts, whatever the asset class may be, but these things can be converted based on the highest and best use as the market changes and progresses in whatever area you're in. And that's what I found was very attractive, was there's a long-term play as well as, who knows, maybe for this site here, Main and Main moves west, and now this is a place for apartment buildings, and then you sell it off there, but you're cash flowing every step of the way, all the way through.
And it's largely undeveloped. I mean, you're talking about you're storing stuff. So in many cases, you're talking about open air lots.
Exactly.
There might be some indoor, but that indoor is not. It's not crazy development indoor. It's metal buildings. Right? Something like that, right?
We typically focus on properties that are 30% less building coverage ratio to this size of the lot.
Yeah.
That's typically what we're focusing on.
Yeah, got it. Yeah, I mean, revenue per square foot, I think, is really strong. It's really high.
Well, I'm happy you brought that up. So let me tell you one just quick little note here in South Florida. So one thing that I like to tell people about is right now in some of the markets in South Florida, you're talking $3 million an acre. So you're going to pay up for the price per acre. But additionally, on an industrial asset right now, they're getting upwards of $20,000 an acre per rent a month. So if you do the quick math on that, I don't have a calculator in front of me here, but it ends up being an 8 cap. Yeah. So if you pay market price per acre and you get market rent, you get an 8 cap. Or if you compare that to a multifamily asset or a retail asset, you're typically not going to get an 8% cap rate by just taking market price per acre and market rent and doing that math. It's going to be a little bit less.
Yeah, not anymore. I mean, inefficiencies in most things these days, I feel like they've gotten so narrow.
Yep.
Inefficiencies in real estate have gotten so narrow.
Correct.
You make money in the gaps. You make money in inefficiencies. They don't grow on trees anymore. I think this is still one of the places where there's some inefficiency that's out there.
You can't even find the market rents. The rents that I even spoke about takes tremendous amount of effort, tracking data, talking to owners. You can't go on CoStar and search industrial outside storage and pull up rent comps. It's non-existent.
Right.
And that's what creates that inefficiency.
Yep.
And that's why there's a lot of opportunity in the space right now.
I love niche. I love people that do niche things. I love niche businesses. I think you can't be all things to all people. So people talk about scale, and misuse that word a lot, by the way. People misuse the word scale. That what they mean is grow.
Yeah.
They don't, the definition of the word scale has kind of gotten lost, I think, in the world. But really what we're talking about is growth, right? Growth in an area, niche business. And you went from one kind of niche thing to another. What was in between? How did you get from wholesaling property to this?
So the biggest thing was, I told you the first story that we went through. And ultimately we were finding a situation where in wholesaling, you're trying to find the cheapest type property. You're trying to get the best deal from the seller. And then on the other side, you're trying to sell it for the most amount of money to a buyer to create that spread for you. That's how you make money. But what that does is it creates a situation where every seller, distressed sellers don't own 50 of them.
Right.
So you're going and trying to find a new distressed seller every time. And then on the flip side is you're negotiating against all your buyers. So you're pushing pricing.
Sorry to interrupt, but they're also not repeat customers. It's not like they have a year from now, they want to sell something else in their portfolio. It's a one-time transaction.
Exactly. And I saw that when I was younger. It's like, okay, this was fine. Like I'm hustling, I'm working. I need to go find a new seller every time. That's fine. But then as I saw the ability to grow and all of that and do this repeatedly, it became very difficult. So that's where I got into commercial real estate. Right around 2019, 2020, around there. Did a lot of retail type properties, triple net lease type properties, but I'm an analytical guy and I'm not sure like triple net lease properties, there's some analytics to it, but it's a lot of cut and dry, long-term leases, you know, you're selling the lease.
Yep.
So I got into self-storage probably 2021, 2022 after I did retail for a little bit, worked on self-storage assets and actually
which was hot. I mean,
the hottest,
is, but like, it was like discovered
flashy. If you went on Instagram, you saw everyone was doing it. And, you know, I got excited by that too. And I got into it even because of some of those things. I saw how it was very interesting. Same thing I talked about with the RV and boat, with the rents going up and all of that. But that slowed down. And I actually grabbed an RV and boat storage listing that I put together a plan to convert to 3-story climate controlled self-storage property.
Because did you even really understand that it was an RV and boat list? You thought it was a self-storage development play.
I saw a lot.
Right.
I saw a lot with some stuff parked on it and an opportunity to convert it.
Right.
And that's how I looked at it.
It was a good location for self-storage, and you were like, that's a development for self-storage.
Yeah, the numbers worked pretty well. Like there was other developments going on. So I threw it on the market just purely as a conversion play. All the self-storage guys were offering me, I think the deal was 2.05 million, if I remember correctly. I was getting all offers like 1.5 from self-storage guys. Couple guys show up to the property and I get a full price offer from a group. And I'm like, okay, what are you? I wanted to learn more. What's going on here? Right. All of that. They were going to keep it RV and boat storage. Turns out that I didn't even know where to look, what to look into. This property was doing about $75 a month per spot. Market was $150. Okay. So, and we were selling, I think it was like a 5.75% cap rate at the time. So you're talking
based on what existed
on in place.
Right,
so in place, and you can double the rent.
And you didn't even probably look at the market for RV and boat because it wasn't even weren't even thinking about it.
I didn't know, like I had no idea that was the case.
Right.
So I learned that, and obviously we closed the transaction. Really, it was a good deal, all of that, and they made a ton of money. They doubled the rents, got almost to a 10 cap after all of it. But that really opened the door to like what to look for.
Yeah.
So I started creating a list of all these properties, you know, like the Class B, Class A RV and boat storage properties, and then compared those to the market rents. And I realized this wasn't a one-off situation. This is a situation that can be repeated and all of that.
Yeah.
So I don't want to say, like, I think there was there was obviously thought that went into it and creating the whole company and business model around it. But the very first deal was almost just kind of stumbled into it. Then I realized the different factors as we hit on the HOA communities, all of that's driving the rents up. And that's what it is younger people want to get outside. They want to buy these RVs. You know, maybe they only have a 1,200 square foot home now. So they want to get up and out, and that's their way to do that. So that demand's coming up. So all of that came together, and I realized there was this huge opportunity in the RV and boat storage space. And it's really just have grown exponentially from there, where then we took a couple RV and boat storage properties, and maybe it was a market where truck parking was the highest and best use. So I realized it all comes down to what you mentioned, the zoning, getting this approval for like a light industrial type zoning. And then it can be a couple different uses. And then even some triple net leases, using my experience in the retail space, we're even getting some triple net leases to come in. For example, an RV and boat storage lot may be great for Sunbelt rentals. So it works into these different avenues. And that really is where it all comes together. Is we're taking, you know, one type of property, bringing it out to the iOS space, which is a couple different niche asset classes, and then what is the highest and best use, and that's how we end up getting, you know, the best price for the seller.
It's a great asset class. I think it's a tremendous asset class. It excited me again before we met, and I liked what you were doing so much that I invested in your company. And you're really like, I don't know, I don't want to say that you're the only one that really focuses on this in the country, but like you might be the only one that really as a broker that only focuses on it.
And as a team, like there's a couple guys out there that are focusing on it, that do it, but a lot of these groups and the institutional buyers that just raise 500 million or whatever it may be to purchase
and
these.
There's not that many of them, by the way.
No. And
very few.
And they're going to local MLSs. So they're every time they want, by kind of like what I was saying with the wholesaling thing. Every time they want to buy a deal, they're going to a new broker, a new seller. There isn't that pipeline of brokers working deals into them. And that's what we wanted to do. We wanted to be that group that can educate mom and pop owners and sellers, you know, get their property listed and be a resource, you know, to move those properties to the right buyers who can pay the right price.
And they need it because, like we said, I'm sure there's some there's some roll up going on, but those people aren't selling yet at the moment.
No,
for sure.
no.
How much of this space would you say is owned by larger institutional or like private money versus mom and pops?
I would say in the RV and boat, so I'll break it up into a couple different sections, RV and boat, truck, and then kind of the rest of iOS, more the triple net lease. The rest of the iOS triple net lease type stuff, I would say is probably like 20% or less owned by institutions. Still a lot of mom and pop owners, a lot of business owners. So people that owner users is a big thing in that space. Truck parking is, I mean, very, very, very small. I would say 5% are owned by the institutions. A lot of those are yards, and that's the class and quality is going to improve. Right now, the quality is a little low, and what those groups are doing is bringing that quality up. And then the RV and boat storage space, I would say like 15%. All of these asset classes are all very fragmented. The institutions, like I believe the largest RV and boat storage owner owns like 50, 60 of them in the country. And there's a few thousands. So there's thousands of them.
I think a few thousand is underserved. I think
absolutely.
Thousands, right? But all the more reason for a broker. I mean, at the end of the day, like it's easy to be a broker if there's few players, there's sophisticated players, and the information is accessible, visible. You know, in those situations, people want to push brokers out of the way, but it's very difficult to do. There's a lot of value in brokers. So you've got to dig deep in your hole, right, in your little niche. And get to know all these mom and pops, really.
Exactly.
Trust it, become the name in the space, and then you are the source, right? That's
exactly. And trusting, like that's the big thing we've been focusing on over the last 2-3 years is getting out in front of these owners. They've owned these properties for so long, so our job is really just to build the trust with these owners until it's time for them to sell, and then we're hopefully rolling them up into these institutions when their lifestyle gets them to a point where it's time to move on from that property, and that's what we've been doing.
And even forget about the scale part. I mean, there's people out there looking for multifamilies and looking to build portfolios. They might not be institutions, but the multifamily business has gotten pretty sweaty, pretty tight,
competitive.
As has the self-storage business and the car. I mean, you can go on and on, right? All these asset classes, everything's popular. The word gets out and everybody moves into a space. And by the time you hear about it and you're reading about it, it's probably too late.
Absolutely.
So yeah. Tell me a story about some of the more interesting deals you've got. I know you've had some larger portfolio deals, right?
Yeah.
In which you've had, either some mom and pops or, an owner of a lot of different disparate locations kind of roll up into a larger portfolio and become kind of larger, interesting things. What are the sizes of these things, first of all? What are the sizes of a typical deal that you see and that are out there? And what are these things? How big are they?
Yeah, I would say 2 to 15 million is typically our sweet spot of deals. Like if we're going to a more mom and pop owner, it's going to be $2 to $4 million. Then we're going to sell to someone else. They're going to add a bunch of value. For example, maybe it was a gravel yard. Now they're going to come in and pave it all, add the light fixtures. But then if it's a deal like that, they're typically being sold in the high $8, $9, $10 million range. And obviously geographically based, because we do deals nationally. So South Florida is going to be obviously a lot more price breaker than say Virginia or something like that.
Where do you see most demand?
I joke with some of our buyers here that we call it the NFL cities. Like the big NFL cities is where a lot of our transactions are happening.
That's fascinating. Why? You think that you just created that? Is that connection? There's a connection to it?
I think that's like the NFL cities typically go where there's a lot of ports and things like that. Ports bring jobs bring people. Then the RV and boat storage stuff goes well. The truck parking, obviously, they're bringing to the ports, container storage, all of that.
Makes sense. Yeah.
So like that's where a lot of we see our deals do the best. Like you're going to be around the outside of the country. There's obviously markets like Nashville that are more interior, but it's going to be mostly what we call the NFL cities is where a lot of our transactions are
Never
happening.
heard that. Did you make that up?
Actually, no. I forget who brought it up to me, but someone brought it up and I was like,
it's good.
I'm using that. I like that.
All right, cool. Wow, the NFL really extends into they own everything at this point.
They're even affecting brokerage markets as well.
Seriously, they're becoming a household name, obviously, but like they're weaving their way into every vernacular. Talk to me about some of these industrial size deals that you've gotten into.
Yeah, so like we were working on one portfolio that was close to, let's say, $140 million. That was a truck parking portfolio, all in South Florida. There's a couple in more northern Florida, but that's it's the roll up. This was an owner who I don't want to call him mom and pop by any means. He has a massive portfolio, but he's out there every day wearing a t-shirt and shorts, driving around. He's an operator. He's going out And we were trying to bring this to a group that, can make it very sophisticated. For example, he uses pen and paper for all of his things. Right. Add an app to it, things like that the big groups are trying to buy them up, make it more, add a process to everything, make it more centralized, have a management team. So we're working on that opportunity for a while. And then we actually found a group, back to the deal story, that wanted to work on it, and then had some massive financial issues with, they were doing a merger and all of that with another company. Again, it's all the roll-up strategy. Mm-hmm. So they were actually trying to roll up with another company while putting our property under contract. Unfortunately for them, the whole entire thing blew up in front of them, so they had to back out of this transaction. But it just goes to show the amount of money and all of that that's getting combined here and rolled up into one company and all of that.
Yeah, it's so interesting as you're talking, thinking about some of the things that have been in my head recently over the last couple of weeks. I'm going to be contrary to the probably the entire world in saying this kind of thing, but I think that we're starting to feel like a little bit of pushback on the way that institutions spend money and private equity spends money in industry and in business. And so what you said was really funny, that this guy's got a pen and paper and let's put an app to it. Let's put technology to it. And that may not always, serve the best to operate he probably does just fine on a pen and paper, right? It's probably reasonable. Maybe.
No, he does beyond fine.
Yeah.
Because it's interesting that you say that, because I think, it's one thing I laugh about looking at, because I see both sides. Yeah. I have a great relationship with that seller. I also have a great relationship with the buyer. Yeah. They both want to do business entirely different ways.
Right.
But this seller, business. It's the connections, it's the network. And it's funny to see the private equity. They're like, let's come in, we'll just cut this cost here, do this here, add an app. But what he does is he has different connections with all the different players in his market. So he's moving tenants here, moving a tenant here, maximizing every inch of the square footage, because he owns these properties and knows how to move them around. So it'll be interesting to see how these big private equity shops overcome that, because they can say, okay, we're going to raise rents by 5%, add an app, and that looks great on paper. But what happens when one tenant leaves and now you have leasing commissions that he didn't have to pay? Mm-hmm. You're not utilizing every square footage of the lot. So it'll be interesting. And I think there's there'll be some, trials and tribulations that go along with it all. But just like any other asset class, I'm sure they'll figure it out.
We see that movie in all these other asset classes and all these other businesses that PE get into. I think what happens is they do it at scale. And I'm going to use the word scale in the right way. They do it at scale that's so large. There's so much money flowing in that a few little broken eggs on the edges, it's okay. It doesn't bother them. Their overall strategy of buying more and more, having more on such scale that multiples and values continue to go up despite the fact that there's broken eggs. And they recreate, they're buying efficiency and actually moving to inefficiency in exchange for size.
One of the groups that we even worked with said exactly that. I forget the exact breakdown of what he said, but he was like, 20% are going to be home runs, 50% are going to be okay. And we're totally accepting that 20% or whatever the remainder, they're going to flop and we're going to lose money. But as long as we have that bell curve, it's fine. And that's how they look at it.
Which is okay to a degree. I mean, listen, that's a classic, I call it the small business dilemma, right? Where you see this all the time. So many people that are in small business can't get past a certain level. And the reason they can is because they have to touch everything's got to be done exactly how they would do it, 100%, like perfection, to the way that they would do it. And they hire somebody, and you're not going to hire somebody who's going to do it exactly the way that you would do it to perfection. If you get 85% out of them, great. And we're taught, and it's right that okay, accept that, coach the people, focus on the people, and that'll enable you to grow and get to the next level. And all that's true. That's very true. At some point, I think there's a bell curve, or a
full circle
wheel.
Moment.
It comes back around. Silly stuff. I just parked on the street, and I sat in my car and had to download an app and pay a thing and whatever. It took me 15 minutes, to park.
Just let me go put my card in.
Let me go put my card in and pay. There's nothing efficient about what just took place and me paying for my parking, And that happens all the time in life. There's so many things. I'm sure I get frustrated. I'm there's 3 apps to do a thing and the drive, and I got to share this and that or whatever it is. We become a little bit inefficient in some of that. So having that, like that operator that you talked about, that's got, he's on site every single day. He knows every single tenant. He knows everything that's going on. He knows every spot that's vacant and how long it's vacant for and what can I fill in there. And, but I know Charlie down the street and he needs a thing, so I'll call him. And he's probably squeezing every dollar out of it. I don't think that's anything new. I think that that's what PE does. That's the value that they bring, is the scale, and they're exchanging that efficiency. But it's just interesting that you're going from efficient to inefficient. And yeah, you need technology and systems to run those things across a large scale, but you're definitely losing probably more than people realize, I think, in that technology.
I completely agree. I think like those companies that do all of that, they're obviously, like we just spoke about, they have their bell curve, so they'll do just fine. But it is interesting how those things go full circle. And I think that me as a 30-year-old guy who grew up in the age of everything moving to technology, everything moving to apps, I find that client one of the most interesting people to talk to and work with, because I look at it like that's so interesting how everything to you is a relationship. It has nothing to do with the apps, and seeing the success that he's having. And it does make me laugh at some of the, like the parking app thing, that it seems more efficient, but what is actually, what's the best way to do it?
Yeah.
So it is interesting to see from his perspective.
Yeah, it's a trade-off. So where do you see this thing going in 5 years? First of all, you and your brokerage. As an investor, I really want to know this answer, but no, I'm just kidding. But, and what do you see the industry going though, actually?
So for us as a brokerage, we want to be known as the go-to shop. Like I said, this is a highly fragmented market. First of all, from the seller side of things, they want to know, we want all the sellers in the market to know that we're someone that they can trust, lean on. What we're offering people is valuations on all their assets, whether they want to sell today or in 5 years. What I always tell owners is, I'll be here in 5 years. My goal for you is to add some value to you, educate you, so when it's time to sell, you know who to go to. So we want to become the number one go-to people for industrial outside storage in the country, that they can rely on us and feel like they can trust us. From the buyer side of things, it's kind of the same thing, but on the flip side. I want them to know that whenever they're looking for a new acquisition or a new opportunity, they can come to us first, because we always have that inventory. And really, it's a growing market, and I want to just help the groups take these properties from the mom and pops, create that portfolio, and then eventually they may sell off to a REIT or one of that, and I would like to assist in that one day as well. And then as a space as a whole, kind of just back into that, you're going to see it get highly centralized. These groups are raising capital since starting this year, I believe there's been two $500 million funds that have been raised just for iOS properties. And that doesn't include the RV and boat storage. They're not looking at that stuff.
They're not looking at that stuff at all.
They're purely looking at, your triple net lease, port type properties.
Yeah. And to be clear, we talked before about the industrial outdoor storage is already and has been a more sophisticated, its own asset class, more so than the RV.
But it's also growing. It was just the first CMBS loan was done on iOS properties in the fall of last year. So it's becoming much more legitimized and all of that. And that's where I see it continue to go, is continuing to move from a highly fragmented market into these institutions and becoming much more sophisticated. Like a lot of these deals are trading at 8 caps. But realistically, the risk profile, I always say cap rate is an evaluation of risk. And right now they're trading at 8 caps, but is it really a risky property? We're leasing the vacancies sub 3%. They're all near ports. They're highly desirable areas. So what I see is these groups that are buying at 8 caps are going to build up a portfolio and eventually, obviously interest rate market driven, sell in the future as a portfolio for 6 and 7 caps. Once this becomes much more financeable, the big Blackstones, BlackRocks are all dumping their money into it, and the CMBS stuff. So once it becomes much more, what's the right word? Like mainstream and all of that, you'll see the cap rates come down, and these groups that are buying these portfolios up are going to make a killing.
Yeah, no question about it. Is that mostly who your buyers are? Mostly who you see out there buying is, we've talked a lot about the institutionals and where this is going and how we see this rolling up and getting at scale. But are you still seeing, in the couple of years that you've been doing this, I would imagine 10 years ago, you're not seeing those institutionals. The number of trades is probably down a lot then versus now, right? So the trade frequency, but you're seeing more, mom and pop to mom and pop. I think you're probably seeing a lot less of that now, but are you seeing
I think though it's more market driven. When in 2021, around there, you had a lot of, this was right after COVID.
Yeah.
So a lot of companies are doing very well. And we saw a big influx of capital from your mom and pop owners. Like, for example, one of our buyers sold a fishing company. He owned like 5 boats that did offshore fishing and all of that, sold it for like 30 million. So we were having a lot of groups like that were going from a very hands-on business and looking for that, like, 10 hours a week type business, which is RV and boat, truck parking, or an iOS property, which is going to be a little bit more hands off. That was all 2021, I would say 23, 24. And then since 23, 24, when cost of capital went up, so now those mom and pop owners, they go to the bank still. Their interest rates have jumped up a lot more than the institutions that are going to different avenues for their capital. So now over the last year and a half, it's been a lot of funds and institutions that can get the cheapest cost of debt. So I don't want to say that it's going to stay that way, because I think once interest rates come back down a little bit, or just the market starts getting a little bit more, starts moving a little bit more, I think those 1031 buyers and all of that, the individual investors will come back out. But right now, yes, the most competitive people have the cheapest cost of debt, and that's the institutions.
Yeah, of course. And there's always a layer whenever it's like that too, of what's their floor. They're not going to buy stuff under 5 million or under so many spaces or whatever.
Exactly.
So there's space there too, but it takes time for these things to happen. I mean, it's slower in real estate, I think, than it is in a lot of other industries. It's always slow.
Definitely lagged behind.
Yeah. It just takes time to locate properties, to, pull these out of the, out of the woodwork, for brokers like yourself to step up and realize what they have. And then, you're becoming like, a big source of, of knowing these sellers and understanding their value so they can get the most value out of it. I think that's the biggest thing too, is before there's no market for it, who are they going to sell to? It's not organized, that market anyway. So now you organize that market a little bit. So,
and then you mentioned about the price points, like how the bigger groups don't want to buy under $5 million. And I think that's definitely true. And one thing that I've noticed as well is that you have the mom and pop owners who see all these institutions or the funds or just a little bit more sophisticated buyers buying up these assets, and they see it on whether social media, whatever it may be. And they're like, I want to do that. I want to go buy a property like that. Right. But really they don't have the capital, because they're buying $5-10 million properties. Yeah. And one thing I've noticed is because what we sell is, like, it's not the flashiest looking type properties. So when you get to $1 to $5 million, a lot of those are value add properties. It could be a dirt yard with a bunch of containers parked on it, or trucks or whatever. And that scares the mom and pops away. And so it's interesting. Those deals are moving a little bit slower because, the mom and pops who can afford it, it's scary. If you haven't bought a bunch of industrial properties and you look at this yard with dirt and containers on it, it might be cash flowing just fine, but you get a little spooked out. Yeah. So that's also, I think, has a factor on it of like what we're focusing on is that, like, I'd say right around the $5 million and up, where we do the ones lesser, but like I said, there's some issues with that.
Yeah. And obviously the value add is where it's more fun, and it's where the juice is.
And then seller financing. We're doing a ton of seller financing right now, which allows those mom and pops, like when we find a seller that, has owned it for 30 years, doesn't have debt, that's when the mom and pops are coming in. And those deals, I love doing those deals. Those are great to see.
I think there's more of that here than there is certainly in multifamily or industrial. You just don't see that anymore. In so many other asset classes. Seller financing.
Because I think what I believe would be that multifamily and all of that is transacted a lot more.
Yeah, of course.
So if you've transacted in the last 5-10 years, you probably added debt.
Yeah, of course.
And therefore you can't offer as favorable financing. A lot of our properties, most of the ones we've sold, the owner hasn't bought or sold a property in 20 years or greater.
Yeah.
So that's the type of owners we're working with.
It's a cool asset class, man. I think it's again, it was the demand that was on my mind before we even really started talking about this and before we met and dug into it. But the supply side is makes it even more attractive, and like it's unique. I don't know if there's any other asset classes out there right now that are as poised, I think, for kind of, for the future, right? And for what's going on. And now, what's going on right now.
Yep.
Industrial storage brokers.
Yep.
Right?
Yep. That's
awesome.
correct.
Industrial storage brokers. Anything else to add before we wrap up?
I think that's it, Matt. I think that's it.
Cool, man. I appreciate it. It's been great having you here.
Thanks for having me. I appreciate it,
my friend.